Hello and welcome to the look ahead for Thursday, the 30th of November, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, on the earnings front, we'll be watching numbers from Dell Technologies. Now, Dell is expected to report a slide of 36% in adjusted earnings year on year, amid continued weakness in the traditional server and storage business. However, we are hoping to see a cautious recovery in the PC market. Sales, though, are set to fall 7% year on year. That's a slight improvement on the 13% decline in the previous quarter. Now, it's quite interesting at the time with Dell are expected to be reporting. They are indeed trading at an all-time high. Now, partly this is because of the optimism surrounding the recovery in PC demand, but it's also a stock that's touted to benefit from the AI growth and basically building servers for AI applications. So that's pushed the share price up to $76. As I said, that is an all-time high for the stock. Expectations, if we just have a look there at the chart there, we can see we're seeing sort of some RSI bearish divergence. So just worth being wary about whether we're going to see a pullback. So far, the 20 SMA has been guiding the price higher. Bulls are going to be looking for that $80 level. As far as support is concerned, there's a pretty strong support down there at just above the $63. And we can see that's came from the jump following the previous earnings, which beat expectations, not only forecasts, but also guidance as well. So just moving on now to the economic calendar, we'll be watching. We've got the Chinese MBA manufacturing PMI expected to come in at 49.7, just up very slightly from 49.5 in October. Obviously, that's still below the 50 level, which separates expansion from contraction. Any weakness there could just hit sentiment amid those ongoing concerns about the health of the recovery in the Chinese economy. Also, we'll be watching German retail sales. They're expected to fall. They're expected to fall annually, 2%, and that's 4.3 better than the 4.3% decline that they saw previously. On a monthly basis, though, we'll be expecting a slight recovery in retail sales of 0.4%. That was after they fell 0.8% month on month in the previous month. Now, this ties in with the fact that we've been seeing slightly better than it was, a slight improvement in German data across this month. We saw the PMIs come in better than expected. We saw the IFO business climate improve for a second straight month. We've seen inflation data came through today that also eased in line with expectations annually, but on a monthly basis actually fell much more than expected, 0.4%. And also we've seen consumer confidence tick higher as well. So I think the data that's coming through from Germany suggests that the downturn in the economy there is bottoming out, but also that weaker than expected inflation does also hint towards perhaps the ECB may being at the end of its rate hiking cycle and potentially looking to cut rates next year. In addition to German retail sales, we'll also be looking at Eurozone inflation. Now, that ties into that discussion we were just having about whether the ECB will be looking to cut interest rates next year, whether they'd finished their rate hiking cycle. Now, inflation in the Eurozone is expected to cool again further. It cooled to 2.9% year on year in October. It's expected to cool to 2.7% in November. Core inflation is also expected to tick lower to 3.9%. So, the picture here is of cooling inflation. And it's quite interesting because although inflation is cooling, we've still heard ECB Christine Lagarde push back against expectations of the ECB cutting interest rates. She's still saying that it's too early to claim victory in the fight against inflation, trying to keep, the prospect of another rate hike on the table. But I think the market really is pretty certain that the ECB, the next move they'll make will be a rate cut, and that will be in Q2 of next year. Just having a quick look here at the euro US dollar. Now, what we have seen is the euro has really pushed much higher against the US dollar and very strongly across the month of November. It reached a high of 110.20 today. And that's basically been this combination of hopefully improving prospects for the Eurozone economy, but also mainly the story here has been that weakness in the US dollar. So we had Federal Reserve comments coming in a little bit more dovish, which have hinted towards perhaps a rate cut from the Federal Reserve sooner than initially expected next year. Euro US dollar bulls are going to be looking for a move over that 110.20 level in order to bring in 110.60 into focus. That's the August high, and above there 111, which was the May high. On the downside, we can see support at around the 108.50 level. That was last week's low, ahead of the 200 SMA. I'd take a move behind the 200 SMA at 108.20 for the bears to really gain any momentum, or more momentum, should I say. Also, it's a big day for economic releases tomorrow. We've also got US core PCE. Now, this is going to be a massive focus. Obviously, there's been so much at the moment on, US yields falling, expectations of the Fed adopting a more dovish approach to monetary policy, inflation cooling, and the US potentially avoiding a recession. So that's what's been in play at the moment. And we had those dovish comments from Federal Governor Christopher Waller last night, who suggested that the Federal Reserve had monetary policy in the right place in order for inflation to continue cooling towards 2%. And he said that if inflation continued to cool, that the Federal Reserve would consider, or should consider, cutting interest rates. Now, on the back of that, the market really brought forward rate cut expectations, pricing in now probability of a 40% probability of a rate cut in March next year. So that's come forward a lot. As we can see, expectations for the core PCE is for it to continue cooling. It's expected to fall to 3.5% year on year, down from 3.7%. And on a monthly basis, it's expected to rise just 0.1% in October. Now, that's down quite considerably from the 0.4% rise in September. Now, there are so many charts we could be looking at. We've seen the NASDAQ push higher, we've seen the dollar come lower, but this is a good one. It's gold, which has been pushing firmly higher. We've seen it really rally hard across November. It's trading up at $20.40. So $2,040 per ounce. That's the level that was last seen around May. Now, there is that sort of the resistance that we can see there at the 2048 level, which was the high that we saw in May. Now, if we do get a push above that, then that will bring the 2081 level into play. Now, as far as support is concerned, there's a fairly solid support that we can see there around the 2009 level. We took a little bit of time to push over that, but that's the October high. I think that's a fairly solid support for the time being, with a breakthrough there exposing the 200 SMA. I hope you've enjoyed what you've been watching. If you would like to receive more video content like this, then please subscribe. And if you do like the video, then please make sure you press like.